Okay, something that's not well known in the industry by stay-at-home investors, retail investors, is that there are two sources of information in the market, two spreadsheets, huge spreadsheets, that carry all the broker forecasts, all the history of numbers for companies, and they come from either Reuters, now called Refinitiv, or they come from Bloomberg. So the way Reuters, Bloomberg work is that they ask brokers, often for a contra, you get a Bloomberg terminal if you give us your forecasts, or however they arrange it. But brokers are tapped into Bloomberg and Reuters, and they are constantly dumping their new forecasts into the spreadsheets of Bloomberg and Reuters. Consequently, Bloomberg and Reuters are pumping out how many brokers are following a stock, what their average recommendation is, what their recommendations are, what their target prices are, and it's carrying all the forecasts, the earnings forecasts, sales forecasts, thousands, in fact more than that, tens of thousands of forecasts every day are being updated on Bloomberg and Reuters. It's why these things are so expensive. And those two information sources, which are very similar because the same brokers are putting into both, those two information sources are used by the whole industry. And some packages, some newsletters do nothing but regurgitate. They pay hundreds of thousands of dollars to Reuters or Bloomberg, and they regurgitate that data in a pretty form. And you're paying hundreds of dollars in order to access two databases that are being replicated through every broker's research, every a website, newsletter, a media site are all using these two spreadsheets at a cost to themselves. So we're all working off the same numbers. So if you imagine that you are going to go and look at the PE yield forecasts of BHP and deduce that there is something there that nobody else has spotted, then you are kidding yourself, because all the data on those spreadsheets is in the price. It is the consensus already, and the consensus is reflected in the price. So the weird part about this is all that data is of no use to you in terms of trying to predict where a share price is going. You are not going to spot anything in those forecasts that somebody else hasn't already spotted and that isn't in the price already. Point being, consensus forecasts, PEs, forecast yields, PEs are not going to help you make money in the stock market. Access to all that data is valueless to somebody trying to make money in the stock market. The one thing that will make you money in the stock market is to know or guess or work out when those numbers are wrong, because that's the consensus. So if BHP is expected to make $100 next year on the forecast and it makes $100, the share price isn't going to move. But if you think, and you're right, that BHP is going to make $120 next year, you can go to the consensus forecast and go, wow, everyone thinks it's going to make $100. I need to buy it because when the results come out, it will surprise. So the weird thing about the stock market is in order to make money from fundamental analysis, you have to guess where everybody else's forecasts are wrong. Can you do that?